Welcome to the broadcast. Wanted to bring my crypto update and an update on what I think the market looks like once a week. Like I said, I'm back in the game in terms of content and media surrounding this stuff. So I want to bring about the best info and what I think the market looks like for everybody watching and paying attention to my broadcast. I know I have a lot of people inside my signals channel who ask questions, and I've had that channel open for a long time. My intention wasn't to be like a guru or anything, but what I do think I can do is bring a lot of value to what's happening in the market and really define what's going on and a lot of things that happen, because there's a lot of people shilling stuff. There's a lot of people telling you to join their communities, buy their coin, do their thing. It's going to make you millions. But in reality, what makes millions of dollars is making calculated decisions intelligently over time. The person who chases the $1 million trying to make it right now is the person who never achieves it. The person who works to make incremental pieces of that million over time is the person who does achieve it over and over again. And that's my goal and philosophy in this market. Yes, there's volatility, but we can hedge and leverage our ability to remove some of the volatility by making smart decisions and not investing in like shit coins and just stuff that isn't going to go anywhere and stuff that we don't have to necessarily watch 24/7, because a lot of people want exposure to this market, but not everybody wants to watch charts and pay attention to what's going on 24/7. And so my goal is to ultimately dispel and really work through a lot of what's happening in the market and help people identify and understand why it's happening and what's going on. So let's just start off with just a little overview of the market. So over the last 7 days, Bitcoin's down 14%. If you look at today, when I open up my trading view chart, we've had a little bit of a run. So in terms of the run we've been on recently, it doesn't look very big in terms of the grand scheme of things. That's 15-minute. Let's go to the 4-hour. But it had a decent run up, which was a lot of shorts getting liquidated, and then boom, right back down. And in my opinion, there's a reason behind that. And there's a reason why we're in this range right here of, let me draw some lines. We're in this range of like 31.2 something. And that right there. So I think there's a specific reason behind why we're in this range and why we cleanly hit this range and punched back down. We could go a little bit lower and we might, but I'll talk about why I think that's happening. So I talk a lot about futures and manipulation of markets. And so the idea that Bitcoin is a free flowing asset and is a clean market is ridiculous. It's not in any way, shape, or form. There's institutions who are manipulating it. There's whales who are manipulating it. The asset does not move naturally. The asset moves based on what the people manipulating it want it to do. And so the people who kind of follow it do TA and all this stuff. But when it starts to get manipulated pretty heavily, what happens is it goes wherever these people want it to go and where the strike prices are and where the drop dead contracts are. And they do a little bit of a process where they're banging the close. And so what that means is they will take the coin, they'll push it down, and then before close, they'll allow it to pop back up, or they'll push it up and before close, allow it to pop back down. So they can not only win on their futures, but they can win on the shorts and then win on the pop back up. It's basically like double dipping. You dip into the market with actual coins, and then you win in the market when you actually put your futures contracts and prices in. So when we look at that, let's take a look at the futures quotes on the cmegroup.com. And in my opinion, this is one of the biggest reasons that the market does not operate naturally. It's like a virus and a disease, but it's something that it gives institutional exposure and safety to institutions to be able to get into the market, but it creates a huge amount of manipulation and volatility. So let's look at Bitcoin where it's at. So the previous settle our open price and our high are kind of what we're looking at, our high and our low. So our low is 37,365, which is kind of the low end of the contracts. And then our high is 39,235. So let's go back here and look at where we're at. So 39,235. When we come up here and look, well, we hit this line almost identically to where that is, and it's magical, right? They don't want it to go past that because they don't want to create a new high. A new high on the CME's contracts means that their contracts aren't going to be exactly where they want them to be. So they push it back down when it gets really close. And then when it gets to the bottom, kind of push it back up. Now, this could go a little bit lower because they can still pop it back up before Friday, February 28th, or when these contracts expire. And so it's not, in the past, it was about like closing the gap and all that. But what it's about now is being able to not only get the price when the contract expires at the perfect spot, but also being able to short the market all the way down and then push it back up so you can double dip on the shorts and then dip again on the drive back up. So your contracts make you the money that you wanted. And the way CMEs work is someone will buy the contract and say, okay, I think Bitcoin's going to be 39,235 at the end of February. And if they hit that, their contract expires and they make money at the end of the month. And so what happens is they collude together and they have a large volume of assets that can allow them to set the prices they want it to be and then manipulate the prices in the right spots. So that way the asset moves where they want it to go. They can short and they can hit the contracts and they double dip on the market, which essentially is banging the close. And so in my opinion, I think that's a big reason as to why Bitcoin gets manipulated and moves pretty heavily. And if you go on like Glassnode, you can look at accumulation and distribution ratios and you can see where institutional buying is happening and if there's really even any retail volume. And right now what we're seeing is there's not a ton of retail volume. Retail isn't doing this. This is institutional buying and selling. And so that's where you can get the idea behind manipulation. Then if I turn on some of my indicators here, we can start to see where it's happening. So you can, the yellow X's, let me get rid of these. There's too many lines. So what we can see here is the yellow X's are indicative of heavy volume, and heavy volume isn't retail volume, it's institutional volume. And so you can see it gets pushed down, it starts to come back up, it gets pushed right back down, starts to come back up, gets pushed right back down until it starts to get really close to that final expiration price. And you can kind of watch it. You don't really see a lot of it outside of that, but right here it kind of starts. So we have the first big dump, and there was some manipulation back here, but it's too long ago now. But then we start getting pushed down, then it gets sort of held in this spot. And we can spot that on different time frames as we see it. And then we can go back and look at the wallets and look at the openness of blockchain and really see where it's happening. So just a ton of it all over right here. So keeping it down, not allowing it to drive. You can just see this entire month is just ripe with manipulation. And normally manipulation happens on like the 1, 3, 5 minute time frame. But when we start to see it happen with this much volume on like the 15, usually it's towards the end of the month. And the end of the month means that the contracts are going to expire. And it means that people need their contracts to expire in value or expire at the strike price to allow them to do this double dipping philosophy. And so I believe that's what happens right now, because you can see the manipulated right here on the 15, then it moves to the next candle and it stops and goes away. And then it'll just stay. It'll stay in this tight trading range until Friday, which is my birthday. And they'll win. And this is how the markets are manipulated. And it doesn't matter if it's a bull, it doesn't matter if it's a bear market, but the markets are pushed and dictated to where these institutional sellers and these futures traders want it to go, because they can not only trade on futures, which are basically paper contracts, but they can go in and trade the coins too. And so they can double dip by shorting and then driving the market up. So they win on the coin side and they win on the paper side. So let me know if that was helpful. Just drop a comment down below and say helpful if that was helpful in understanding like where we're at, what's going on in the market, and what I think is happening behind manipulation. The other thing I like to look at in terms of the market right now, so a lot of people are saying, are we in a bull? Are we in a bear? What's happening? For me, like I talked about in my last video, let me find my other chart. Let's look at this one. So in my last video, I talked about how I had this line kind of drawn that was like our sort of a support band for the bull market. And we obviously fell straight through it. So that didn't work out too well in terms of holding it. So now we fell straight through it. We kind of hit this support line. We just kind of pushed back and then we got rejected off of it. So now this is going to act as resistance. And in my opinion, if we can hold this, it gives us a leg up. But the caveat is, guess what happened to push it down through? It was manipulated through the line, pushed back through, manipulated through the line, pushed back through, manipulated straight back down, pushed back through. And now we've got manipulation, I think, on the 15, pushing it back down. So this line is we're not being allowed to cross these lines. We're being manipulated up and back through. Institutional selling is kind of keeping this pinned down to where they want it to be. And ultimately, I think that's what's happening. So it's hard to predict bull, bear, whatever, because it's late in the month. Typically late in the month, we're not allowed to pump because institutions need to make their money. We're only allowed to pump from about the 1st to about the 15th of the month. And then after that, institutions need to make their money, which is another theory that I have about the lengthening cycle. We have a lengthening cycle because manipulation is becoming so commonplace and becoming so prevalent because institutions know they can do it and they know they can get away with it. So it's creating cycles that they don't have the whole month to pump. They don't have the whole month to operate normally. They only have about half the month, and then the rest of the month's manipulated. So it cuts the ability of the cycle over a year in half. So it pushes that out and makes it longer and longer and longer over time. And even look at the charts right now, which looking at this, I would expect this to fall. These are basically death candles that are saying, let's fall. We're getting liquidated. Longs, goodbye. But we're still kind of holding in the spot. So obviously we may drop lower because I can always pump it back up. But that's sort of my view on the market. And then when we look at some more on-chain data, what I like to look at is the Bitcoin spent outfit profit ratio. And so what this really tells us is above this one line is typically indicative of like a bull market. And below this is typically indicative of a bear market. And so what'll happen is in a bull market, let me show this longer. In a bull market, we'll start to just bounce off and rebound and rebound and rebound, and we'll see this thing pretty high. And then in a bear market, we'll see this thing start to drop below, and then we'll get rejected off of it, and that acts as like a resistance piece. So when we look at where we're at right now, it was more bullish here. We kept popping up. We were above the line. It was acting as that support. And then right here, we got stuck in that like that little mini bear market. We got stuck below, stuck below, stuck below. Final capitulation was around June 25th, where we really plummeted below. Then we were able to pop back up, and we used that as support for a little bit. And then it kind of stayed above. And then we started to fall below, stayed above. And now we're at a point to where we're starting to fall below and getting rejected off of it now. So it's like came above, got rejected, came above, got rejected, came above for a minute, rejected, and then we're back down. So when you look at where we're at now, this is actually the lowest it's been in a while in terms of, as of January, in terms of that capitulation. Let's move this to. But so now we saw that like January was pretty bad in how it looked. And if it keeps getting rejected and staying under this line, it's indicative of more of a bearish sentiment of the market. But if this thing can push above and we start getting above one and we keep pushing through, then it's indicative of more of a bullish sentiment. So the goal is to get this thing to use that one essentially as a support band and keep it above. So right now it's not looking amazing, but it's kind of just staying tight to it, and it doesn't have a lot of room to move. So let me know if that was helpful. Just give me a helpful down below if you think that was helpful. Then what I want to kind of do is just do a little market outlook. So let's look, is anything performing? For me right now, in terms of like buys and pickups, I'd be waiting for a 30K like support, like if we hit that, or I'd be waiting for us to go back up and test 45. If we can test 45 and clear, it's a good indication that we might be okay, because hitting that 200-day moving average is going to be around like 48, 49K. So that would put us in a good spot. Above that average is indicative of moving back into like a bull market. And right now, that average is 49.4. That would be a clear indication that we have the ability to propel upward. So looking at the market, Luna was up a lot more. It's gone down quite a bit, but Luna had a lot of good news. So Luna had the Anchor protocol was able to, the Luna Foundation raised $1 billion to form a Bitcoin reserve for their UST stablecoin, which means UST is the biggest decentralized stablecoin that now has the biggest decentralized reserves to support it. So it's not supported by fiat. It's not supported or by a central organization. It's completely decentralized, which is pretty amazing. And then on top of that, Anchor protocol got a $450 million investment into their reserve. So now people in Anchor protocol can come down here and be happy that it has this yield reserve popped up. It's actually, the borrow's up quite a bit, and this is how they make money. And then people deposit for 20% APY. And for me right now, and kind of the market and how unnerving it is, I put a lot of assets into Anchor because it's 20% APY on UST, which is a stable coin. So I earn 20% off of every dollar that I put in. So I can put dollars in here, earn a significant I'm essentially, the whole economy could be in a bear market and collapsing, and I'm still earning 20%. So I'm hedging the market in an amazing way. When the market dumps, you hedge over here and you're essentially pumping with the value of $1 where you get 20% off of each dollar. So this allows you to hedge in an incredible way. So it's a good place to store dry powder and stable reserves because it's not going to move. It's not volatile. It stays at $1. You earn 20% off that dollar. The other things that I'm kind of doing right now, but before we step into that, that's why I'm pretty bullish on and pretty excited about Luna. I'm not saying go buy Luna, but I am saying the Luna network and the Luna ecosystem is becoming incredible. They just sponsored a professional baseball team. They have the Anchor reserves topped up. They put $1 billion in Bitcoin as the Bitcoin reserve for US Terra. And so now UST is the only, let's see, is the only top 15 stablecoin that is decentralized. Binance is obviously centralized. They could shut it off if they wanted to. US dollar coin is centralized. They could shut it off if they wanted to. Tether is stabilized. So all of these are stabilized, centralized. So all of these are centralized, which means they have a central authority that has the ability to freeze and monitor funds. So if you want to be truly decentralized in this world, well, it's important to be away from decentralized stablecoins. And the safest one that is decentralized is US Terra. And I had another question about stables before I move in. Let's go to my watch list about how you can pick stables that are kind of safe, because just because it's a stable coin doesn't mean it's safe. So when we look at stables, what we want to do is look over here and kind of get an idea of where they're at in their market cap. So when you look at Tether obviously is the largest stable coin. It's centralized. It has quite a few issues that we're not really sure how much reserve currency they have, but Tether's obviously, I mean, it's the biggest one. US dollar coin, I think, is probably even safer than Tether. Binance US dollar is backed by Binance, another big one. These are all centralized. So these can be shut off in an instant. If someone decides they want to shut down someone for fraud or whatever, that can happen. So that's where stable coins like Terra that are not just decentralized, but have a backing of decentralized assets and don't depend on fiat become incredible. DAI, I think, is fairly safe and stable. True, and a lot of these ones are just newer. You just have to be careful with newer ones. They fall off peg. If they fall off peg and completely fall apart, and you have money in there, you're going to lose a lot of money because it's just going to collapse and the thing's going to just become unsustainable. So the ones that I kind of trust are, of course, I trust Tether, US dollar coin, Binance. UST is my favorite because it is decentralized. DAI is safe. I think Frax is relatively safe. MIM is popular. They had a lot of drama, but they've shown to hold their peg pretty well. My or Matic is pretty stable. They're backed by Matic. I've noticed they've become fairly stable. And Day is kind of a newer one. I don't know if I would just play in a lot of those, but for the most part, if you're in these ones that are in like not the top 5,000, but like the top 20, even top 50, you're probably in a safe place. I do think Frax and MIM and probably My too are fairly stable. They've held pretty well in terms of the market. So that's kind of my view on stable coins. Let me know if that's helpful. Just drop a helpful down below. And then now that we've gone through that kind of stuff, let's go through what I'm currently doing. What do I think? What am I doing in the market to hedge sort of risk and to hedge what's going on? Well, basically what I'm doing is playing with stable coins. That's it. I'm just farming stable coins. So let's go into what I'm doing. So I'm in Anchor. I put a large portion of my assets into Anchor just to let it sit there and earn interest and earn 20% APY while the stocks market's down and while the crypto market decides what it wants to do. So if it goes into a death spiral, my dry powder is ready to go and it's earning. So it's not just sitting here doing nothing, and I'm not sitting in assets that are losing value. The other thing I'm doing is I'm a little bit in liquid driver. So I know I just talked about this. Just be careful with some of these smaller stable coins. I've been okay in it, and I'm willing to play with the risk. But I am in places like liquid driver. The Fantom network right now is my favorite. I'm basically over there or an Anchor. But DAI and US dollar coin at 27%. These are both $1, so they're both worth $1. So you're in 27% off of this pair, which is pretty incredible because then you can park your assets. You get liquid drivers as a reward. So you could harvest it once a week, harvest it once a day, whatever, and then sell it back and put it back into this farm. But because I like this ecosystem and I like this protocol a lot, what I'll do is I will harvest this liquid driver and then I'll move it over here into Beethoven for beats to earn beats, because this one is really neat. It's like an index fund for your coins. And so you can be in projects that are like 70% Phantom and 20% dollar coin, or these three stablecoin pairs, but it puts them in places where it's not a 50-50 split. So impermanent loss doesn't become a big issue. And because I think of the uniqueness of this protocol, it's like Balancer. It has a lot of legs. And I think this will be something to collect and essentially collate. But what I look at on this one is I'll take that liquid driver and I'll go and I'll put it into one called Pirate Party. And until recently, Pirate Party was it was like 150% or 112% APY or something like that. So what I'll do is I'll take the rewards that I get in Liquid Driver from Liquid Driver and I'll move them over and I'll put them in a Liquid Driver Phantom pool in Beats. So I'll just sell the Liquid Driver in half, sell half for Phantom, half for Liquid Driver, put that in Beats, get the Beats rewards, and then I'll stake the Beats rewards. And so then I'll take the profits from that staking and I'll move it back to the beginning and build on my stablecoin pool. So what happens is you have pool one that leads to pool two that leads to pool three that leads you back to pool one. And you create this circular structure to where the initial income you put in is safe in a stablecoin, but then the rest you put in is money that you're making, essentially free money that you're earning off of the first one that leads back into the first one from more and more APY in each pair. So in my opinion, it becomes much more safe because you're not investing your own money. You're investing assets that you're creating from your original pool that is a safe pool. So let me know if that makes sense, or if you want me to dive deeper into it. And then the other one I think that's pretty neat right now is just 100 finance on Phantom. So you can basically just earn 10% off of stables you have sitting around. Obviously, Anchor is a much better deal on this one, but you can do the same thing. You can earn your APY in 100, and then you can take 100 and you can put those rewards inside of one of the pools on Beethoven, earn the beats, do the same thing, put it back. And so you create these cool little like circular investment strategies where everything leads right back into your stable coin. So the money you're producing earns money that produces more money for you, but you're not necessarily putting money into the sketchy assets right now when the market's not necessarily stable. So it's kind of what I'm doing right now. Let me know if you have any questions about where we're at. And then the last thing I'm kind of playing on is Taro. I think Taro is, if you're in the US, you have to use a VPN. But they have some pretty neat stablecoin pairs to where you can put them on like leverage, up to like 20 times leverage, and you're not going to get liquidated because it stays close to its $1 pair. I'll even keep it as low as like 60 cents up to $1.50, which isn't going to happen with something like US dollar coin and DAI or Tether. And you can earn a pretty decent return off these around like 30%. I think this one might be, it's just pretty volatile in terms of what I've seen the returns end up being. So it might not be the best strategy just to park something and not pay attention, because you can go from, let me find one of the pairs. You can go from like something like 11% to like -14, back up to like 200%. I think it's just too wild to not have to pay attention to right now. So it might not be the best place to park, but it's a pretty interesting project to look at. So that's pretty much where I'm at. Let me see if there's any questions that I didn't answer. Oh, someone said, what are my views on holding Bitcoin long-term in terms of like believing in the movement versus like trading? So for me, I hold. I don't necessarily like to trade coins that often. I'll do a little bit of leverage stuff, but for me, and I have another video about this. If you want that video, just comment video down below. But what the video talks about is how I create a investment portfolio that is safe, an investment portfolio that at least hedges against big loss. And so it basically comes down to, and this isn't financial advice. Remember, nothing in this video is financial advice. It's just what I do. But what I'll do is I'll hedge with about 50% of my portfolio in Bitcoin, and I'll hedge the rest of my portfolio with about 40% in ETH. And then I'll put about 10% into like top layer ones and like gaming, like top gaming projects. So AVAX, Phantom, Matic, Mana, Sand, Engine, stuff like that, that I know is going to be safe. And then I'll have like a fraction of a percent, like 1% or less than 1% in like smaller caps that I think might do well. but it's that small because I know those could also collapse and I could lose everything. One of the biggest problems I see a lot of people in the market doing is investing so much into these alts and like small caps and just getting wrecked and losing everything and not having any sort of hedge in terms of like Bitcoin, ETH, or even reserves and like Anchor protocol. So I think that's something to think about and something to really take into account when building a portfolio and trying to be safe. So that's it. That's all I have to say for today. Let me know if you have any questions in the comments down below, and let me know if this was helpful. If this was helpful, just give me a helpful down below, and let me know what your top takeaway from this is. And if you have questions, drop those down below and I will reach out and help you. I'll answer them in the comments.